14 points separates this tape from a structural regime shift. This is the Gamma Brief. Wednesday, May 27th, 6:45 a.m. Eastern, ES futures are trading at 7,564. Yesterday, the prior session's call missed as the index breached the call wall and exceeded the expected move. If this pre-market gap holds, then we open in pure upside price discovery. Pre-market, the regime registers as positive gamma with a net GEX magnitude of plus $9.5 billion, but is strictly borderline. The GEX Flip sits at 7,505, meaning we are operating near the gamma flip. In a confirmed positive gamma environment, dealers are net long options, buying dips and selling rallies to dampen volatility. However, with the VIX at 16.92, a minor slide flips dealers into negative gamma, forcing them to chase price and amplify momentum. Treat this as a transitional regime. Looking at the geometry, ES sits 114 above put wall, negative 34 from call wall. Gap fade reprices floor to 69. ES futures have already cleared reclaimed levels at 7,499 and 7,524. Crucially, at 7,564, futures have already breached the 7,530 call wall. Dealer gamma resistance has failed. The 80-point expected move projects up to 7,644, mathematically supporting this breach. The put wall remains anchored at 7,450. Three catalysts shaped the overnight board. First, Iran ceasefire optimism pulled treasury yields lower and set a risk-on tone. Second, cross-asset flows reflected this with ES up 0.36%, VIX down 0.53%, and the 10-year yield dropping 6 basis points. Finally, in sector rotation, utilities added 1% and communication services gained 0.9%, while energy lagged down 1.1% alongside a 1.9% drop in consumer defensive. For today's threat matrix, calendar risk is moderate at 3 out of 5. Fed Governor Logan spoke overnight, so that risk is absorbed. Looking ahead, we have Fed Governor Cook at 3:55 p.m. Eastern and Jefferson at 8 p.m. The asymmetric risk today lies in the tape's ability to hold the call wall breach. A failure to sustain momentum above 7,530 could invite a sharp mean reversion fade. The environment is consistent with defined risk directional setups targeting upside reach. It is unforgiving to mean reversion income structures given the breached ceiling. A failure to hold 7,505 invalidates the upside thesis and triggers a gap fade breakdown. The primary plan is currently active, holding above the 7,505 GEX Flip with a push through 7,530 call wall favors directional debit structures targeting 7,599 upside reach. If ES loses 7,505 and confirms below 7,456, the alternative plan takes over, targeting a downside acceleration toward 7,438. The overnight session has already dismantled dealer resistance, leaving the tape in upside price discovery. The primary risk is failure to hold the flip, which would instantly transition the hedging environment and trigger a violent gap fade. The regime is at a knife's edge. A 20-point move rewrites the dealer playbook. Level set, bias defined, good luck out there. Standard disclaimer remains. This is market intelligence, strictly not financial advice. Options are high risk, manage your size, and trade your own plan.